Ladies and gentlemen, moving on to our next panel discussion, and the topic is Unified Platform Approach, Merging FS and Non-FS Services for SME and MSMEs. I would like to invite our moderator on stage, so please help me in welcoming Mr. Vineet Singh, founder and CEO, Castler. Let's have a huge round of applause and let's welcome him. So, very, very warm welcome. I would now like to invite our speakers. Please put your hands together and welcome Mr. Rohit Prasad, founder and CEO, Easebuzz Private Limited. Very warm welcome to you, sir. Please help me in welcoming Ms. Pallavi Shrivastava, co-founder, Progcap. Very, very warm welcome, ma'am. Please help me in welcoming Mr. Bhavesh Jain, Chief Revenue Officer, TransUnion CIBIL. Welcome, sir. Please help me in welcoming Mr. Ajay Rajan, Country Head, Government, Multinational and International Business, Transaction Banking and Knowledge Units, Yes Bank. A warm welcome, sir. Let's have once again a huge round of applause for this absolutely fantastic panel that we have right here on the stage. Thank you. Over to you, sir.
Thank you. It's great to be at GFF again and an absolute pleasure to host the panel today. From the Indian context, we know the importance of SMEs and MSMEs in India. Okay. There's a lot of good work that financial institutions and startups have been doing in this space. Just to throw some stats on the audience, there are around more than 4 crore registered MSMEs and SMEs in India. They employ more than 20 crore people, contribute around 6% of GDP for manufacturing and around 25% of the GDP for the services sector. So the impact is humongous. This opportunity comes with its own challenges though, the major ones being the lack of accessibility for financial and non-financial services. To understand the benefits and the complexities of this challenge, today we've got an extraordinary set of panelists. Let me introduce you to them. I'm going to read a bit. Introduction is a little detailed. So we have Ajay from Yes Bank. He has over 27 years of experience in banking and leads the government and enterprise business along with transaction banking at Yes Bank. And he also heads the strategic knowledge units. His expertise in driving innovation and digital transformation has positioned him as a leader in the banking industry in India. We have Bhavesh in the green t-shirt there from TransUnion CIBIL. He has over 2 decades of experience in credit information business. He is the Chief Revenue Officer of TransUnion and leads sales, member services, marketing and revenue management at TransUnion CIBIL. He also drives strategic initiatives and business growth. We have the only lady in the group, Pallavi. Pallavi is the founder of Progcap, which is a leading supply chain finance company that is empowering micro enterprises at the last mile through its unique faster revolving credit line, FRCL model. She has built Progcap into a leading SME financing firm and has been recognized in the media and socially for her innovative approach for financial inclusion. Lastly, we have Rohit, who is the founder and CEO of Easebuzz. And he is a visionary leader in the Fintech industry and started Easebuzz with the aim of empowering Indian MSMEs and SMEs through innovative full-stack payment solutions. Under his leadership and guidance, Easebuzz has become a leading player in the Fintech landscape in India, simplifying digital payments and enhancing financial inclusion for small businesses. So it's great to have such a powerful panel present today to discuss a unified platform approach and its impact. A reasonably complicated kind of a topic, but I think we have the right panelists to, you can say, peel the onion and give more information and knowledge to us. Historically, unified platform approach, in my opinion, has been followed by banks because their geographical presence gave them the retail reach to provide a wide range of services to all customer segments. So my first question will be to Ajay, asking him to shed some light on his own personal journey of banks and his banking career and share his own personal experience over the last few decades on the evolution of services that banks have been offering to SMEs and MSMEs, and how this has evolved over time. Over to you, Ajay.
Yeah, thanks, Vineet. And so if you look at banking as a whole, and when you look at India's journey from a $250 billion GDP in the 1900s to 1990s, sorry, to almost 3 trillion in 2023, and as we are going towards our quest of a 30 trillion dollar economy by 2047. So banking has played a big role, in that. And within banking, if you actually look at it, the whole digitization and digitalization of financial service has been a big catalyst for propagating that. So that's, kind of, I think to set the context. But having said which, banking itself has also seen a very challenging course. So it is no longer only banks who shape the future of financial service. We have, and we have three very prominent founders here. The fintechs have actually now kind of almost joined the banks in terms of size, scale, of the impact that they have been making to financial service. So banking itself has also seen a very challenging course over the last few years. And if you look at it from a customer perspective, again, the technology progress which has happened over the last decade or so, the customers have become increasingly comfortable with adopting technology, adopting digital in terms of availing of financial service. The same CFOs, and we talk about SMEs and MSMEs, so the founders, the CFOs of these companies who are using in their day-to-day lives, an Amazon or a Flipkart or a Swiggy or a Ola, they're very comfortable using digital as a channel to transact. And hence it becomes very logical that they also expect the same user interface or the same accessibility, when they look at financial service. And that is really what has, been a catalyst for banks to adopt digital, because the customers have become very technology efficient and they expect that the bank should also become very digital first or digital native in terms of providing their service. So with that understanding, I would say that the banks are no longer limiting, their focus on transaction management, but they're actually looking to work with customers. And when I say customers, it could be retail consumers, it could be MSMEs, SMEs, or even corporates to say, in terms of looking at life cycle management. And when you say life cycle management in that context, a unified customer approach or an experience, and that is what, as I said earlier, they are experiencing today with a Paytm or a PhonePe. They are looking at a single platform which is offering a plethora of services to them. So when they look at banks, when banks look at unified customer experience, we feel that it is no longer now advantageous, it's actually become essential. So we have to adopt a unified customer channel or an experience which combines speed, adaptability, and more importantly gives a personalized approach. And that's what a uniform platform is able to achieve, because we are able to have a single platform. We are able to bring the financial services which the bank itself is able to provide. It is able to partner with agile fintechs or tech fins to bring in technology via banking as a service into that platform and give the customer a one-stop experience which provides banking and beyond banking. So that I think is really where the future is at that point in time. I'll just kind of summarize, finish with saying how does it benefit the bank and the consumer? Of course, from a consumer perspective, I already mentioned it is a one-stop platform. So the consumer obviously gains in terms of having everything in front of them. But even if you look at it from a bank perspective, when I go and offer this unified approach to an SME, MSME, or even any other corporate, right? It's a platform approach, so I'm able to give all my products and services to the customer. B, in terms of banking, it's no rocket science that product penetration is absolutely critical. So the more products or cross-sell you embed to the customer, the more revenue realization or profitability accrues to the financial institution, and that's really what the bank is gains aside, of course, enhancing the customer experience. And more important, it is also promoting an ecosystem, right? So the success of India's overall fintech ecosystem is that the banks and fintechs have partnered and brought this whole collaborative approach for the benefit of the customer. It is no longer the bank's balance sheet that only adds value to the bank in today's day and age. It is also what the bank contributes to fostering the financial ecosystem and also the customer at large. So I think that's really
Thanks, Ajay. Thanks, Ajay. And rightly said that a lot of startups today are innovating on top of banking services, and I can vouch for Yes Bank. They are at the forefront of, you can say, helping startups ride on their platform. Castler is a part of the API platform of Yes Bank services as well. So moving on to Bhavesh from TransUnion CIBIL. Okay, so just giving a brief intro on TransUnion CIBIL for folks who don't know. I think we have a very contextual audience here, so everybody should know. But still, TransUnion CIBIL has played a critical role in improving access to credit, enhancing financial inclusion, promoting responsible lending, and supporting the growth of SMEs and MSMEs in India. Bhavesh, since your product is being used by, I guess, all the three panelists here, and almost maybe everyone in financial services and a lot of folks in the audience as well, I wanted you to share deeper insights on how distribution of financial products has evolved, especially for the SME and the MSME sector, and over a period of time. Okay. Bhavesh is a veteran. He's spent 15 years at TransUnion. And also it will be great to hear about your views on which are the biggest non-financial services use cases for SME and MSMEs as well. Yeah. Over to you, Bhavesh.
Sure. Thanks, Vineet. So, well, Vineet did give a detailed introduction, but let me give you a background in terms of what do we work with. Our definition of financial services is the area where we work with institutions on the credit underwriting use case. That's a classic definition of financial services. The non-financial services are outside the credit underwriting use case. Now we work with close to 6,500 plus institutions, largely credit institutions in the country. Right from your largest public sector bank to cooperative banks who cater to neighborhood lending. And the institutions who cater to neighborhood lending, the cooperative banks, largely are working with the MSMEs. Now, what are the areas we work with MSMEs through the credit institutions and directly with the MSMEs? The first one is in terms of helping credit institutions engage with these MSME borrowers. Now, why that's important? Because we know that MSME gives a very huge contribution to the GDP, almost 30% plus. The productivity is very high. And it's important to move from the unorganized trade sector to the organized trade sector. And how does TransUnion CIBIL play a role? Is that with banks, NBFCs, help them identify and pre-qualify MSME borrowers to lend to the right ticket size, lend to the right product, lend to the right rate of interest. Then at the same time, let the MSMEs come on to CIBIL.com, access their own credit report. Now, why is that important? Because the entire industry has moved towards risk-based pricing. Now, with the industry moving towards risk-based pricing, the MSME borrower actually gets a benefit. If the CMR, which is the CIBIL MSME rank, is 1 to 3, all the banks in the country actually offer the best rate of interest. Now, this is actually true empowerment for the MSME borrowers, that instead of getting access from the unorganized sector, they go to the large banks, NBFCs, cooperative banks, and they get the cheapest rate of interest. So these are the two areas we work with MSMEs and the banks. Second is the biggest use case around acquisition. Help lenders identify the right borrower, in terms of the credit performance, credit history, utilization, the mix of secured, unsecured trade, multiple data points which we provide to the credit institutions to help them underwrite these borrowers for the loan amount, for the credit decisioning, as well as in terms of the right product fitment to be offered. Now, in this, there are multiple areas where we work with institutions in terms of identifying point in time and a trended view of these MSME borrowers. Moving on from the acquisition space to the portfolio management, where we work with all the credit institutions, again is in terms of helping them which MSME borrowers to go after in terms of offering additional line of credit, helping them retain the good customers, and at the same time, how do we help them identify the borrowers to reach out for payment collections. So these are the multiple areas we work in terms of the financial services space with the 6,500 institutions in the country. There are few other areas which we are working, and this is the right conversation in fact, because below downstairs in the exhibition, we have actually launched a global platform called OneTrue, where we are able to combine the credit data, non-credit data, and a lot of other alternate data sources, bring it together, identify the MSME borrowers, not just the credit tested, but the non-credit tested borrowers, and help institutions to underwrite those borrowers effectively and objectively. That's one use case. Second is in terms of through a tech platform, again API marketplace, which enables institutions to access MSME borrowers information in a microservices architecture, saying that they want a limited information of an MSME borrower or complete detailed information of an MSME borrower. Based upon what's the intent of the credit institution, they can access these data points through an API approach. Third one is in terms of credit education, and that's a big one for us, because we want to ensure that we work with MSMEs and we work with institutions like Progcap, Yes Bank, and a lot of other institutions to make sure that we are able to educate the MSME customers about the importance of a good repayment history. Because it's important. We have a large chunk of MSME borrowers who are into commercial vehicle, construction equipment, and a lot of other credit products where they may not be used to paying it on a monthly basis. So through these institutions and directly, we want to ensure that we are educating them about the importance of good credit history, because once they have a good credit history, a good CIBIL MSME rank, all these institutions would be more than happy to give them at the best rate of interest. So these are some of the non-financial services use case which we are working with the MSME borrowers.
Great, Bhavesh. I think this was truly informative and great to learn about some of your innovations which are making so much of a difference for the SME, MSME sector in India. And I'm sure folks from the audience would have a few questions ready when we come to the Q&A later on. So moving on to the two entrepreneurs on the panel, Pallavi and Rohit. First, let me get started with Pallavi. So Pallavi, I have basically three questions for you. Okay. The first question is about addressing the challenge of financial inclusion. Okay. So as you can say, new age, digital age startups, how are you leveraging technology and innovation to address the challenge of financial inclusion? Okay. Number two, designing a scalable unified platform. अब हिंदी में बोलता हूँ, बहुत लोग बात करते हैं प्लेटफॉर्म, but there are, सबको पता है in reality, there are only so many successful platforms. So how do you do it? What are the tricks of the trade? What are the nuts and bolts? What works in that sense? So what are key factors to consider when designing unified platforms that can scale, adapt, especially for SME and MSME, and make money as well at the end of the day? The third is about distribution and innovations. How do you go about building distribution? I think that is make or break for any kind of business, right? Most businesses in India fail because they don't think enough or execute well enough on the distribution side. Okay. So these are the three questions. You can pick in any order as you deem, please.
Sure, I was quite biased, but let's go ahead. So I'll break apart the journey of how we built out the platform, how we reached the distribution at scale, because MSME lending is a challenging space, right? And we are still grappling with, what kind of success that we have seen in the consumer lending space. How do we really reach to that level of efficiency and ease of distribution for credit to SMEs, because that actually has a business use case. And over the last year, they have data available, they are formal in nature. Credit will become more and more easily available. Like Bhavesh also pointed out, if they have CIBIL score, banks would find it easier to lend, they can get attractive rate of interest, etc. So with that premise, we started to figure out why MSME credit is such a big challenge. This is a question asked in 2016, 2017. And we figured that one of the key things that's really a challenge here is not only the supply issues that we always understand and talk about, which is where we say, okay, banks and traditional financial institutions have not been able to reach these customers because it's expensive, low ticket sizes, how do I collect the money? So all the supply side challenges we hear about, these customers don't have data, they don't have formal, documentation and tangible assets to place as collaterals. All these problems we talk about. What we figured was that the issue was more equally on the demand side. 9 out of 10 customers we met, and just for context, we provide credit to trading MSMEs, which is your shopkeeper segment, $1 trillion retail economy, 90% non-digital, sole proprietorship. So really you are talking more like a consumer lending here. These customers did not, they said, 9 out of 10 said that we don't want credit, even though they were part of an informal credit economy. The reason they said they don't want credit, and we kind of placed them in context, is that they were not saying no to formal credit, but they were saying no to inflexibility. So when we look at MSME credit, we got to find very tailored, customized approaches. We need to understand what their trade terms are. We need to understand when they want credit, on what terms. And those are some of the design elements that we looked at when we started to think about the product. The other challenge we saw was that we were trying to address credit need for this segment using existing financial products, which are more long-term, EMI-based, business loans, term loans. What these customers needed was, very different. They wanted something which is short-term, revolving. They have seasonal demands. They have ad hoc, reasons when credit is needed. So the way we approach this, and you go to any part of India, the remotest regions, you will find any shop. You'll find they are selling some kind of branded product. Some brand will be available. So we started to use these brands as a hook, and we started to partner with the brands. And start to see, leverage their access, their data. A lot of historical transactions data, which is not available with the customers, is actually residing in the ERPs of these brands. Back in 2017-18, we also saw that GST was, we were just out of demon and GST was taking over. So this data was also becoming more trusted, more formal, and therefore we could rely on it to build credit models. So using this data, we are able to generate credit score, which is most of these customers don't have, TransUnion CIBIL score. Many of them have never borrowed before. So this data, which is very high quality, rich transactions data, allowed us to be able to understand their credit behavior on a formal credit, should they get that. And so that's on the access side. On the supply side, we started to work with partners. So on one side, you have the supply chain where you have the anchor corporate and their entire supply chain. On the other side, we plug in the banks and the balance sheet lenders, and we were able to digitize this entire supply chain and be able to provide credit on top of them. Given that we were mostly the first lenders, our endeavor by doing all of this and being able to provide credit and do it in a way that while it's easy to give money, but the trick is in how do you collect back. So this FRCL model that we speak about, which is faster revolving credit line, allows us to be able to build the right mitigants and controls. So using the brand which is providing us access to reach, distribution and data, is also helping us to be able to provide better controls. So these customers get into good repayment behavior, they are paying timely. And so there's a lot of capacity building that's involved beyond just giving out credit. So we're using these design elements, we've built the platform, we've dispersed close to 30,000 crores by now. And the idea and the endeavor and mission for us is that we become the first lenders, such that they are having now access to bureau score. CIBIL is able to generate a score for them, and the likes of Yes Bank and all other banks can then lend, do follow-on lending, so that they become bankable and credit worthy as we go along.
Thank you, Pallavi. It was very well, I think, articulated, and I had a similar story in December 2016 when I started building the unorganized retail merchant network for MobiKwik. And I live in a small South Delhi colony, and in that colony, the market itself, when I went to the shopkeepers, hardly any one of them even had a current account. So how do you KYC them and make them wallet users? Current account ही नहीं है. And they said कि look, HLL, PNG, Colgate, Reckitt, everybody supplies us stuff. So हम तो बदलेंगे नहीं, आपको ही change करना पड़ेगा. Okay, so we had to innovate. So it truly resonates with what Pallavi said, that when you go to these retailers, and we are not talking about South Delhi or South Mumbai or Mumbai city kind of retailers, we have to go deeper into India, and we start talking about organized credit to them. A lot of, I think, concept selling needs to be done before the actual business happens. So coming over to Rohit now, just a second. Coming over to Rohit now. So Rohit just wanted to pose the same questions as I posed to Pallavi as well. That you run a very fairly complex and large, broad payments business. So what are the do's and don'ts as far as building a scalable unified platform is concerned? Okay. What are key things to keep in mind if there are folks in the audience, budding entrepreneurs who are wanting to build and take on these kind of big challenges, which are not only which will be resulting to great businesses, but also good for our country and society. What they should be doing and not doing or avoiding. Distribution and innovations, especially from your Easebuzz experience, that what worked, what did not work, particularly on the payment side of the business. And there are, I think, a reasonable amount of payment companies in India. A lot of, you can say, water has flowed under the bridge, and a few who are doing reasonably well. Yours is one of them. So, what were the key innovations at a product and platform level that really made you stand out, withstand all the competition, and now maybe reap the benefits of living through the competitive environment, I guess. Yeah. Over to you, Rohit.
Thank you, Vineet. So, Easebuzz is about 7 years in the industry today, and let me tell you why we started this company. So, way back in 2015-16, when Demon happened, and we all know that how online payments became so popular, we saw that online payments was alone not a problem statement, because it was available for 15-16 years already with other payment aggregators in India. But beyond payments, there were problems which were unsolved. And when I say that it means the small-sized businesses or the mid-sized businesses which are here in India don't have access to technology or developers, we saw that everybody had a broken collection journey, and most of these industries are very scattered in nature. So I was an entrepreneur since I've been out of college since 2012, and I've interacted with many startups before. So we understood that after going to the industry, we understood that every industry has its own collection journey, and small industry or mid-sized industries cannot afford a very large stack like a Zone, SAP, nor do they need it, because the collection journey hardly involves 3 or 4 features. So we thought of building vertical SaaS with payments infrastructure, and that's how Easebuzz started. We are very clear that we build SaaS which involves 3 or 4 features for every industry, which solves for the collection journey or the digital collection journey. Just to give you an example, say you are in school or a college and you are collecting money through some of the payment aggregators, and you have a UTR generated in the morning, and you have seen that this is the amount of money that has come to your current account. But what happens beyond that is that you have to reconcile your installments with respect to different student categories. You have to understand which fees component has to go to which bank account, and you have to do all that work within your own investments and your own software solutions. What we do as a company is we embed a solution which we call Easebuzz, which is a dashboard where you get all these features embedded with payments, and you can manage your core, student-wise, fee structure, everything on a plug-and-play mode, and it is also available as an API. So we are going one step ahead of payments and we are solving for your fees collection problem. And that's how this product got evolved. Similarly, we solved a problem around collection journey for a BFSI sector, for real estate sector, and we kind of sliced it vertically, where we created vertical SaaS and embedded it with payments. So now any business who is looking at an end-to-end solution would want to use a solution which solves for the collection, and we're almost giving it at the same price which any other payment aggregator gives, and we're basically making money on the GMV that they process. So it becomes a win-win both for the merchant and for us, and that's how we made it scalable. For me, the biggest learning in the last 7 years has been how you create a very cost-effective solution for the Indian market, which is solving for a problem, and how you're making it easily accessible. For us, APIs worked a lot. In fact, 90 to 95% of our business comes from APIs. So if I am building for a merchant, I am also building for other platforms. So if there is a ERP, as I stated earlier, or a CRM company, and they want to adopt our product, they can use it as an API and wrap it in their own software and sell it to their set of merchants. So for me, that's a scalable model, because for me that is lowering my cost of acquisition in some ways. So I'm not empowering only the merchants coming directly to my platform, but I'm also empowering other platforms to become fintech themselves. And this instead helped us to scale. Of course, followed by risk and compliance, which is very important, because we are scaling up to maintain your risks and you have to ensure that you're not basically allowing anybody to misuse your platform. And of course, that also helps you to reduce your churn ratio. So that is very important. And you have to create a cloud-based infra. We felt that cloud-based infrastructure which we used was highly scalable and helped us to kind of manage a lot of automations at the back end. And most importantly, we believe that when we created a platform, the digital KYC process, which was I think being used by very few payment aggregators, helped us to kind of manage the entire merchant onboarding process online. It was mostly offline, I think, in the early years of 2000. But with the digital KYC process, it became highly easy, convenient for merchants to come on a platform and go through the onboarding process. So these are 3 or 4 takeaways by which we could scale the business. And I would just say that if technology is adoptable and is cost effective, it is scalable. And you have to make sure that it is easy to use.
Thank you, Rohit. So coming back to the second part of the Q&A, I'll go back to Pallavi again. So Pallavi, I was thinking that everybody knows that organized structured credit is good for society, good for SMEs, MSMEs, okay? But when will the inflection point come, or it has already come in that manner? If the inflection point has already come, सबको पता है कि कितना अच्छा है ये हमारे लिए, हमारी society और देश के लिए, then why the negative news? There is a lot of negativity around credit and lending, right? The regulator also at regular intervals dives in and says that we need to slow the pace down and छोटे loan कम करो, whatever, and so on, right? So, and giving you the example of the mutual fund industry, where 5 years ago on TV and newspapers, I think every week we used to see a new mutual fund launch ad. And today I think 80% of mutual fund advertising is about mutual fund sahi hai. Okay. So do we need something on the credit side as well, that organized credit sahi hai? And just to inform everybody here at the audience in the panel that today during GFF, Kasla has launched its brand line, Escrow Sahi Hai. So sorry, thoda limelight le raha hu apne ko promote karne ke liye, but wanted to ask this question to Pallavi, that don't we need a movement like that, okay, frankly, to let's face it, lending is a socially and politically fractious kind of a business in India. Implications are social and political. So how do you go about scaling it universally? Okay, when everyone knows, at least we know that how good it is for our country and society and people in general. Okay, naturally it will help folks like you build a great business, but so be it. Okay. Over to you.
Yeah, very interesting question, and I feel like Ajay's trick is working with he's deflecting on the question, but I'll try to take that up. And
targeting the best speaker.
yeah, totally. So I think the way to look at it, and since I'm into the lending business, so I would definitely champion for it. But more importantly, on a personal level, I come from a banking family. My father was a banker, and most of the family members have been into that space. I have personally been a beneficiary of credit. I took education loan to fund my education. And I believe that at that point in time, if I did not have the credit available, perhaps it would have been a different story. Perhaps I would not be sitting here. So I think credit has the power to shift the orbit for individuals, for MSMEs. It has, it has a mechanism to propel growth. But like with everything, it's moderation is the key, right? We talk about buy now, pay later. We've all seen the subprime crisis. We've been through scenarios which should not have happened, and that's when happens when greed takes over. So how do we balance it is the key. How do we use credit like microfinance, which I am a huge fan of? Try to create a model where credit is given to people who can responsibly use it, the women, self-help groups, for income generation activities, to begin with. And then, slowly we see what happens as the effect of the over leverage happens. That may end up happening in other industries as well. And I think the regulator is right in seeing that, okay, we've seen that 2008 cycle of the banking scenario, and then when restructuring had to be done. Today, we are seeing, we are at a stage where there is this massive, massive market waiting to be disrupted. India as an economy is growing. We have still a huge, huge gap. I don't have to quote the numbers here at GFF. We all are aware of it, and it's been repeatedly spoken about. So that gap has to be bridged first, and then we can think about, like, are we over leveraging? In consumer credit, we have seen some bit of that. I believe MSME credit is something where I think the regulator is also not really pushing back on. That's something where we have a massive gap. We have a requirement for more lenders to come in, more models to come in, and unless that is bridged, we can see examples across the world. Any economy that you see which has done well, it has a very strong MSME ecosystem. They create jobs. They employ a large number of workforce. They contribute heavily to the GDP. There's a use case for not empowering MSMEs with credit. So for MSME ecosystem to be strong, you need a robust credit ecosystem. And that robust credit ecosystem will have to come with a lot of guardrails. It has to come with responsible practices. And so I kind of feel, honestly, saying it from the bottom of my heart, I feel very, very proud of our regulations, our regulatory system, and I have a lot more faith, especially seeing what happens in the western parts of the world. So I think responsible lending is the key, and I don't think we are at a stage where, at least in the MSME lending, because this panel is more about that, we are not at a stage today where we can say that we have done over lending and therefore we need to slow down. Right now we need to push, and then at some point we'll have to see how to balance it with right lending practices, with ethical lending practices, and with responsible lending at the core of all of our businesses, whoever is trying to address that gap.
Vineet, if I may just add to what Pallavi very beautifully articulated, the regulator is not against or pushing back on too much lending. What they have been propagating and promoting for a lot of time is that you have to do lending in the right manner. So, there has been, like with anything else that we have seen in the country or globally as well, right? There has been a spurt of players who, frankly, I may say not understand the risks of lending, but because it's a FOMO effect, everyone wants to get into lending. That is what the regulator has, been cautioning us against. In fact, the governor, sir, for the longest time has been speaking about cash flow based lending, looking at alternate, maybe surrogate ways of doing lending. If you look at the announcement which 2 days back has happened, which is the ULI is all about creating a unified platform for various types of lending. So it is not only for KCC or a farm loan. It is actually personal loan, education loan, small business loan, farmer loan, everything, right? And what is the whole concept of that? And this is regulator promoted, mark my word, right? So what the regulator is saying is that we will give access to all of these surrogate informations. use it, analyze it, and then lend it in the proper manner. The whole digital lending guideline, the FLDG guideline, these are all extremely positive steps to make sure that lending is happening in the right manner. I think that's really where the future is.
Thanks, Ajay, for clarifying that. And it's a very, very pertinent point. And maybe we could have taken another hour to discuss ULI and what will be its future impact, but maybe for another session. Okay. But yes, as rightly said, I think for anybody and everybody who is in a financial service or a fintech business, okay, whether you are regulated or non-regulated, it is like somebody giving a gun in your hand. And you have to behave responsibly after that. You have to be accountable of how, when you pull the trigger in that sense. So if there is, we've been talking about self-regulation a lot, that is also maybe a very, very good discussion topic. But I think fintechs are disciplined businesses, okay? If you get up every day and say and think about that today I'm going to do this, maybe fintech is not the right business for you. You should be doing some other kind of business, because fintech does not allow you that kind of flexibility that you can get up every day and decide to do what you desire. Here there are guardrails and controls of what you can do, cannot do, and maybe important thing is what you should do and should not do. Okay. So coming back to Ajay again, and okay, let me go to Bhavesh first, because Ajay just dived into answering the earlier question as well. So Bhavesh, you gave a very elaborate suite of non-FS solutions that you mentioned, okay, while giving a description of TransUnion. One of the solutions that was intriguing was credit education. Okay, so can you delve or dive a little bit more in detail on credit education? Because I think that is also an area where the country or the consumer, maybe the enterprise customer at MSME and SME end, needs a lot of education and information on.
Yeah. Thanks, Vineet. So, a small story. Recently, I actually was invited for a large educational institute's board meeting. And I asked the director after the board meeting, he's saying, Father, because it was a Christian missionary institute, and I asked, Father, you all taught us Pythagoras theorem in school, and it helped me in my engineering days, but it does not help me in real life. And you all taught us about World War. It was good to know, but I don't use details about World War. And why don't we teach great education in our schools and colleges? And he was zapped. He said, valid point. And I said, aren't we missing the big picture, making our students go through the sort of theories which may not be relevant? And to answer your question around credit education, very important. And I'll just combine it to the question you asked, Pallavi, saying that how do we make sure that the unorganized credit sector is moved to the organized credit sector, and give some stats. So we have around 7.5, 8 crore MSMEs in the country, and access to formal credit has been given to around 3.6 crore MSME, because it's all reported to CIBIL, out of which around 80 lakh MSMEs are credit active. Now this, when I compare it to the retail credit sector, it stands nowhere. Which means is that, is it more of a customer issue, a demand issue, or a supply issue? Because end of the day, a proprietor is a consumer and an MSME at the same time. If the same consumer is comfortable to go and take a car loan, why he or she is not comfortable to go and take a working capital from the organized sector? Because I come from a traditional business family where the credit is generally taken from friends or family or from the trade credit side and not to the bank side. And why so? Because probably the lack of documentation is what makes them uncomfortable to go and knock the doors of a credit institutions. And now what is our endeavor or purpose? Twofold. One is financial inclusion, second is credit education. And how do you want to make sure is that the point you made is saying that वो दुकानदार को साउथ दिल्ली में बदलना नहीं है, उसको सिखाना है. सिखाना यह है कि रिस्पॉन्सिबल क्रेडिट सही है. And there are multiple benefits of responsible credit and from the organized sector. So we want to help them cultivate a habit of regular repayment, maintain a good CIBIL score in individual capacity, maintain a good CIBIL MSME rank, and to the point which Pallavi mentioned, saying that transition to happen if they don't have detailed documentation of formal credit, how do you ensure? Thanks to UPI, basis the bank statement, CIBIL and lot of credit institutions can actually provide objectivity to those borrowers. Basis in terms of the velocity of those transactions, cash flows, all those aspects. Third is that educate those borrowers about regular GST filing. Again, through one of our offering of FitRank is that if there is a regular GST filing, the information will be good enough even if you don't have credit. Basis your GST information, it can be underwritten. So our intent is to make sure that we go out to all these MSMEs, educate them about the good credit behavior, and at the same time ensure financial inclusion because responsible credit sahi hai.
Thank you, Bhavesh. And I'll just stretch a little bit of time. I have to ask a very important question to Rohit. So Rohit, as I said at the beginning of the discussion that कम ही super apps हैं जो successful हैं, but still more are coming out. Okay, so Aditya Birla has launched ABCD, Tata had launched Tata Neu, Reliance is launching something, Bajaj Finserv is planning something. So most of the larger, you can say, payment operators are in a way super apps or whatever. They want to do a bunch of stuff, provide a lot of services to the consumer, both MSME and the end consumer. What is your plan at Easebuzz? How do you plan to compete in this era where still after, you can say, reasonable or significant failure in the past, the business behemoths are launching super apps? So how will you compete? What are you planning to do or already doing in that manner? So quick 90-second answer. I want to do leave some time for Q&A as well. So quick answer, Rohit.
Why did you leave out the banking super apps?
But that's always it.
ICICI का super app वो बैठा है.
Hello, banking big, yeah. ICICI, in fact, I read a report a couple of days back while trying to study for this topic today, was they are one of the top 5 apps for airline ticket booking in India.
Yeah.
Okay, so...
The key guy is sitting there in the front.
Okay, great.
So, just to quickly answer, there are a lot of super apps and they're all competing with each other and also with us in an indirect way. But I would say that our market is very different. Super apps mostly are in the offline space, is what I know, and it's a wonderful market to be in, where you can do your bill payments, recharge, and obviously QR code solution is always there. But our market is more on the online side, where there is a website or mobile app, as you can imagine your business to be, and we have differentiated by creating vertical softwares for different industries, which most of these players have not done yet. So we go deeper and we do more personalization for each industry, and that's how we differentiate. And we don't have a mobile app where you start and end a transaction. Rather, we have more of APIs where you consume those APIs in your own mobile app, own website, and you create a fintech envelope of your own, develop your own journey of customers, and sell our solutions with your solutions. That's how Easebuzz differentiates.
And just to add, Easebuzz is actually part of Yes Bank's B2B marketplace super app, which is Yes Connect.
Yeah.
The solution that he spoke about, the education institution, is something that we offer Easebuzz solutions to Yes Bank clients who are education institutions. They actually use Easebuzz solutions.
Great.
Thank you.
Thank you, Rohit. Thank you.
Financial and non-financial.
Thank you.
Thank you, Ajay. Yeah, so great guys. I think this was a great discussion from a great panel. I'll save time of trying to summarize. I think it was fairly intelligent conversation for everybody to understand. So, do we have time for Q&A? Maybe 5 minutes? Okay, so a few questions. If anybody has a pertinent question where they feel that they have to ask the question. One question. I think that lady there in the front row. Yeah.
I have 2 questions actually. So one is, like you talked about MSME lending, and there's a lack of formal credit that we know of, and we look at proxy data. So how is account aggregator? Do you think account aggregator is going to solve it? And if yes, is that something you have already started leveraging in your processes and all? And if you can just quote how this is helping, right? Second, when we talk about MSME lending, my assumption or my knowledge is that that's a small ticket loan, right? And the cost of lending is significantly higher because you're looking at alternate data and the data is expensive. So is there anything being done to reduce the cost over there?
I'll take the A part maybe. So yes, account aggregator will definitely help in taking lending to the next level, because again, as and I did make a mention about this, including when you look at ULI, that's the whole concept, right? How do you give lenders or borrowers the permission to give permission to the lenders to access surrogate information about themselves and use that information to create a credit personification for that potential borrower and the lender ability to take credit from them, right? So no longer is there a need for looking at traditional ways of looking at a customer by balance sheet and collateral and security, but there is so much of wealth of data, financial data, and including non-financial data, right? Land records, for example, in KCC. So it used to be a long process. RBI, the ULI has actually brought it down to a matter of minutes for a bank to actually understand or the creditworthiness of the farmer and give the loan to the customer. So yes, account aggregator is going to redefine, in my view, the way lending happens in the country.
Probably sorry, go ahead. So I'll just quickly add in terms of what are we doing at TransUnion CIBIL. Account aggregator is a fantastic data source, but to further work on the financial inclusion agenda, we launched along with SIDBI FitRank, where a simple bank statement information, say a bank or an NBFC or Fintech wants to give a loan to a panwala or a kirana store, all they have to do is that give that bank statement to the credit institution, they pass on, we actually give a fit rank, and lender can actually objectively lend. Because also we need to understand that this small panwala or kirana store may not be even comfortable to go through an account aggregator journey, and hence we wanted to keep it simple. Same way, if it's a slightly evolved MSME and has been filing GST and has not got access to credit, basis GST trended information also one can give fit rank. So yes, the intent is to make sure account aggregator, TransUnion CIBIL and a lot of other ecosystem players along with credit institutions are working to make sure that the borrowers who are not credit tested, how do we bring them into the formal sector? Sorry.
No, so I completely, second that, third that this is account aggregators has been game changing. June is when it became sort of in a form and shape where we could start to now ping and get consent and got all the data, very rich, very high quality, powerful data, and it's only going to get better from here. So yes. Huge proponent of that. On your other question on the cost of lending, that's been the challenge, right? You do small ticket size lending, you got to put people on the ground to leverage, and then to try to collect the money, so you have to have large field force. In our model, and I can speak for us, is that we heavily use data technology, but also it's a phygital model, also because you got to do your KYC, OSV, so some of these things you don't want to cut corners on at all. And so that's the cost. But the beauty of the structure of supply chain finance is that we are able to onboard let's imagine a HUL or a Samsung, works with hundreds of thousands of shopkeepers, retailers. If you have pre-qualified data, you can do pre-qualified. We have APIs with CIBIL. We are able to do soft pull, pre-qualified, historical transactions data on the ERPs, and we can say, okay, these are the credit-worthy customers as per the transactions data, as per bureau, and therefore now we can reach out to them, get their interest, and complete the KYC process. And now with your account aggregator, that gets, you can triangulate the GST data, the bank statement data, and the transactions ERP data, so that so it saves a lot of cost. and then it's just a matter of completing the process, doing video KYC, OSP, and so that saves cost. And I think if we can build models around that, that's a solvable problem. And more models are coming. We keep hearing and meeting lots of companies trying to do it in a much more cost-effective way using aggregation as a tool.
Thank you, Pallavi. So I'd like to thank my esteemed panel, Rohit, Pallavi, Bhavesh and Ajay for their valuable time today. And extremely thankful to this wonderful audience here. You patiently heard us out. So that's a wrap from us. Thank you all. Appreciate it. Thank you.